baby? Morad, Fiki, what's going on? So today is already August 17th. Can you believe that? Or today's August 18th. August 18th. August 17th. What is going on? Man, it's incredible. And just to see, the housing market, the Houston housing market has just been fluctuating like crazy. But before we get to that, I just got back from Miami. I was with the Grant Cardone Real Estate Club. Big shout out to everybody who's a member of the Real Estate Club. It was an incredible event, learning from some of the best in the business. Of course, GC, Uncle G, and $5.5 billion of real estate acquisitions during the last, so many years of his career. It was just really great, showing how he gets the deals, acquires them, talks to the brokers, negotiates. And right now he's looking to steal some great assets. So it was awesome. I love multifamily cash flowing investment properties. This is my favorite asset class because not only for the passive income that will make money while you sleep, but also the depreciation, the tax advantages, especially because I'm a real estate professional. There's some additional tax advantages that no other asset class can give me. Not stocks, not bonds, not life insurance, not crypto, not Joe Schmo, not my active business, which is, real estate sales. No other asset class or business affords these specific depreciation and tax advantages allowed in the tax code. Now, why would they do that? Why would the government do this? Well, the real estate investor, the long-term real estate investor is providing a service that the government doesn't want to provide, and that's housing, public housing. You own multifamily apartment complexes, and you are providing public housing to the mass community. And so, there's some incredible tax advantages, and it was just something awesome. So that being said, I had a great time. I'm back at work and having a blast. So let's go ahead and jump right in. Yeah, so we're going to look at, as always, we compare 1 year. So we're going to look at July 2022 compared to July 2021 and see the changes. And as you can see, there's a 17.4% decrease in total property sales. So from 12,325 sales a year ago to 10,180. That's a big deal. Total dollar volume, 9% decrease from 4.5 to 4.1 billion. Total active listings are up about 30%. It's a big deal. From 25,000 active listings to 33,000 pending. That tells me probably pending sales are going to be down, and they are. You can see down here, single family pending sales down about 12.5%. The median sales price is up 12.7%, and the average sales price is up 9.9%. Single family months inventory has increased. So from a year ago, we were at 1.7 months inventory. That means how long would it take for the entire MLS to completely deplete all of the inventory at the current absorption rate? So in layman's terms, that means if no new homes come on the market today, how long will it take at the current absorption rate to sell the entire MLS? It used to be 1.7 months a year ago. Now it's up to 2.5 months. Still a seller's market, I would say. I would say anything below 90 days is still a seller's market, although the market's shifting in a big deal, in a major way. So we're looking at that. Let's go ahead and switch to, let me pull this up. Okay. So let's go ahead and move over to, okay. Here we can see, actually, before we go there, let's look at the income. Let's look at the change in income. So this is a big deal right here. They're saying that the rapid rise in property values is not on par with incomes, the rise in incomes. And that could make sense. If you look at the changes from Q2 of 2022 to Q1, the rise in property values, and you can see, or I'm sorry, the income. Income. This is the needed income for the rise in property value. So on average, the income of the Houston metropolitan area was about $64,000 a year to on average to qualify for a home here in Houston, and now that's risen to about $89,000. So a 39.4% increase in income year over year needed to get you qualified for the rise in home values from one year to the next. That's a big rise, and you can see throughout Texas, it's about on par throughout Texas and the United States. Austin metropolitan area, the rise is about 42%. Dallas, 44%. Houston, 39.4%, meaning the hasn't risen as much in Houston. San Antonio, 46%. Texas, 42.4%. And in the U.S., 42.1%. So that's a rapid rise. Let's go ahead and look at so we looked at those. Let's look at the single-family rentals compared with a year ago. Leased listings. Let's see if we can get that a little bit bigger. There we go. So when we look at leased listings in July of 2021 to July in 2022, now this tells us a lot right here. So we can see that leases have increased by 14.5%. So sales are going down and leases are going up. What is that telling us? That is telling us that people don't want to commit. They don't, hey, interest rates are rising, home values are rising. I'm just going to rent. I'm going to rent and let this settle down. This is too crazy. So we're seeing lease listings increase, 14.5%. The average lease price has increased 6.2%. And new lease listings has increased 26.5%. Average days on market from 17 days a year ago to 20 days. I would say that's, pretty insignificant. That's almost the same. So we're seeing leases going up. Let's look at condo leases. Let me increase that size for y'all. Condo leases. Condo leases are going down a little bit, about 5.4% decrease. Average lease price has increased 9.4% from one year to the next. New listings increased 8.3%, and days on market has gone down by 10 days. That means rentals are on fire. Rentals are on fire. Rental chart, the average needed income for the rental chart, we're seeing increased about 10.8%. The Houston Metropolitan County, Chambers County, Fort Bend, Galveston, Harris County, and Montgomery County. You can see they all have increased, with Harris County and Fort Bend County being the biggest. Looking at the chart, July average and median home prices increased. The average home price now is $426,000, where the median home price, meaning all home sales, half are above this price, half are below, about $350,000. So both of those numbers have increased from a year ago. Single-family home sales, 8,370 units in July, and condo sales, 656 units. And just real quick, going back to the chart, we can just see sales are down. So the market's shifting. Market's shifting. What does that mean? What does that mean for you? That means you've got to be honest about the list price. You got to be honest about your sales price. Overpricing the homes by 10, 20% and getting offers on them, it's just not happening. Those homes that are getting 10, 20 offers are getting 1 and 2 offers now. So you've got to be consistent with the actual value of the home. That's what that means. So hope this was helpful and hope you're having a wonderful week. Wednesday. Happy Wednesday. I appreciate you so much. Appreciate you spending time with me on this Wednesday. I'm going to keep you in tune and keep you with the latest, greatest, hottest Houston real estate. I can't wait to see you next time. Have a wonderful rest of the day and a wonderful week.